Ladies and gentlemen, welcome to day 4 of the November webinar series hosted by Woodburn Accountants and Advisors, all about procurement in China. We have had so far a great 3 days. On Monday, we were talking about the direct import program using Hong Kong as a sourcing and procurement hub for export from Asia into the global arena. And on Tuesday, we had Simon Oxley from LF Logistics coming in talking about supply chain disruption, lead times currently, how that's affecting the global sourcing and procurement that is occurring not only from Asia, but in general on a global scale. And on Wednesday, we were talking about, what were we talking about? We were talking about from the Hong Kong Trade Development Council. Sorry, there were so many webinars this week. We had Daisy Ip from the Hong Kong Trade Development Council coming in talking about the T2C services acting as a sourcing and procurement platform, allowing companies globally to gain access to over 130,000 different suppliers in Hong Kong, mainland China, and Asia as well. And today we've got Isabel, who's going to be talking all about mitigating the currency risk as you are trading and buying, not only from China, but China is going to be the main example, but also from Asia. So before we start today's session, again, I know the majority of people on here, there are a couple of new names as well that haven't popped up from the other webinar sessions. But if you would be so kind as to just indicate kind of what stage are you at? Are you a newbie? Are you a startup? Or you're an experienced China hand? For those of you that I am already familiar with, I've already given some background to Isabel, so she has a bit of an understanding. But this is the first slide for interaction, so please don't hesitate to reach out and just converse with us. From a technical standpoint, we are here to educate you. Indirectly, we will be selling our services, which is normal when we are doing webinars. But the whole idea is to show you the possibilities that are out there in terms of creating efficient cost-saving structures, okay? So please use this time wisely. Right? If you've got any questions, any doubts, if you need clarity on some of the points that maybe Isabel is touching on, please go ahead and insert those in the chat box. And it'll be a first come, first served principle where, the sooner you ask for questions, the sooner they'll get answered during the Q&A. From a technical standpoint, Isabel is co-host. So should I be dropped off the system, she will continue on with the presentation and she will then share her slides. If Isabel drops off, I cannot do her presentation. I don't have that expertise, but I will most certainly entertain you while she comes back on to finish up the presentation. So just bear with us. And if you run into any technical issues, again, my only suggestion is log off, log back in. If it still doesn't work, we are recording today's session, so you can just watch the recording later on. A little bit about myself. My name is Christina Kohler-Colucci. I'm the head of business advisory at Woodburn Accountants and Advisors. We are a family-owned organization headquartered in Hong Kong with our subsidiary based in Shanghai. I personally have over 17 years of corporate services and compliance experience in China. My brother, who runs our Hong Kong operation, has over 25 years in Hong Kong. That just tells you the age gap between us. What we do and what we focus on is we help foreign investors to enter the Hong Kong and the Chinese market. We help them with their market entry strategies. We help them with the implementation of those strategies. And the fun part, honestly, is focusing on the growth and the scaling up for these entities. So that just means making things more efficient, optimizing structures, and making sure there are cost savings in the process so the bottom line increases and you gain more profitability in the market. If you are interested in getting our book, The 10 Biggest Mistakes Companies Make in China, you haven't received a copy, just email me at christina@woodburnglobal.com. We're offering free complimentary copies of this ebook that was written during the pandemic. It's my opinion of the 10 biggest mistakes. We have extended that to the 100 biggest mistakes, and hopefully that book will be coming out next year. So I'm going to stop talking now. Isabel is going to take over. And just to emphasize, this is a presentation on how to mitigate currency risk when trading with China. Isabel, I'll let you share your screen.
Yes. So let me share my screen right now. Can you guys see it okay? And also
It's perfect. Okay? It's perfect.
Okay, thanks a lot, Christina, for the great introduction and also for your invitation to this webinar. So it's actually a pleasure for me to be here sharing with all of you about this topic. So basically, my presentation will have a few sections. I'll start with briefly introducing about our company, Ebury. Then I'll speak a bit about the Chinese Yuan and what has been the process of internationalization and what has been its evolution throughout the last 10 years. And then I'll give you a bit of view on if you're an exporter selling to China and if you're an importer buying from China, what are the currency risks to be taken into account here? So without more delay, let me go directly into my presentation. So to introduce myself, I'm responsible of the China West initiatives at Ebury. Ebury is an electronic payment institution which is devoted to help SMEs across the globe to be able to transact internationally in a simple and efficient way. So through the 26 offices that we have across 20 countries and our team of, so we're actually now over 1,000 employees, we aim to offer our clients, SMEs, international payments, foreign exchange services, including currency conversion and risk management, and also local currency accounts and short-term financing, so that these SMEs, they can transact internationally with peace of mind and make sure that they can focus on growing their business. We are regulated by FCA in the UK as an electronic money institution, and also by MBB in Belgium as an authorized payment institution. And our major shareholder, it's actually one of the top international banks, Banco Santander. So I wanted to start this part of my presentation by introducing first what are the different denominations that the Chinese currency, the renminbi yuan, has. So across the currency markets, you will have seen that oftentimes the Chinese yuan is called in 3 different ways. So we have CNY, CNY non-deliverable, and CN8. So what are the differences between these 3 denominations? These are actually 3 different names of the same currency, and this depends on how the currency is traded and where. So CNY, it's for the Chinese yuan that is traded purely inside mainland China. So that means excluding Hong Kong and Macau. So this is an exchange rate which the daily rate is fixed by the Central Bank of China, PBOC, and the daily rate is only allowed to move between a band of around 2%. So this currency is only traded and fully deliverable inside of mainland China, and you can only access to that if you're a financial institution or an entity present locally in China. Then as an alternative to the CNY, which is only allowed to trade within mainland China, we have the CNY non-deliverable, which is outside China. This is a free float currency, but the settlement is always done in USD, so it's not possible to deliver directly RMB. Because of this, around 10 years ago, it was launched the use of CN8. So this is exactly the mirror of CNY, but outside China. So this started initially in Hong Kong, and now it's extended across the globe. This is free float, and this is fully deliverable outside China, meaning that as a financial institution that is outside China, like Ebury, will only have access to this liquidity in CN8 outside China and access this market exchange rate. But because these are all part of the same currency, the Chinese yuan, once the CN8 enters into China, this is entering as CNY. So there won't be any exchange rate differences even though there is some small exchange rate difference between the CNH traded outside China and CNY traded inside China. So throughout my presentation, in order to avoid confusion, I'll try to talk in general about RMB, which is the general denomination of the Chinese currency. So here, I want to illustrate what has been the evolution of this Chinese currency in the last 10 years. So before, what we see is that most of the companies in China, they will be trading overseas in USD, because this has been the strong currency, and the RMB used to be pegged to USD. So therefore, like suppliers in China would tend to prefer to receive directly USD and then exchange it into RMB. But we can see that how this has been changing throughout the years. So one of the major milestones was in October 2016, when actually the RMB became part of the basket of currencies of the International Monetary Fund. So starting from there, we started to see more and more internationalization of the Chinese yuan, and also, of course, more and more volatility. So if you look at this chart from 2016 to present, right? I have highlighted here a few ups and downs. So in April 2018, that was when dollar RMB dropped to its lowest level. So one USD could only exchange for 6.25 RMB. Then we saw how the RMB started depreciating again, and then it reached out its weakest point against the USD in August 2019. That was when actually there were all these trade tensions between China and the US. The commercial tariffs were imposed, and at that time, dollar CNY exchange rate peaked at 1 USD could exchange for as much as 7.15 RMB. And then since last year, 2020, we've seen how, because of the global disruption with COVID-19, the RMB has been like appreciating, because China has been one of the first ones to get out of the pandemic, and its economy has been recovering. So the RMB has been strengthening again, not only against USD, but also against the major currencies. And if we look at the volatility across this year, the exchange rate between dollar RMB has moved as much as 15%. So what would that mean in terms of you as a company that is trading with China, right? So as I was mentioning about the internationalization of RMB, right? So I already mentioned about the Chinese RMB being part of the International Monetary Fund in 2016. Some other milestones that I want to highlight in this process is in January 2018, the Chinese Central Bank launched a guideline promoting corporates to use more RMB for the use of its international transactions with other companies. And then as of December last year, so milestone number 7, I want to stop a bit on that, because that was the latest development on the internationalization of RMB. So previously, if you were a company buying from China and your suppliers intend to receive RMB directly from you, one of the main hurdles that they had was that because their Chinese banks are not used to receive RMB, they would ask the company to submit a lot of paperwork, and they need to go physically to the bank's branch in order to deliver all this documentation. So that was something that was putting off a lot of suppliers in terms of receiving directly in their local currency. So this was a notice that was promoted by PBOC along with the other Chinese regulators, when one of the things that they enabled was to simplify the requirements from banks when receiving RMB directly from overseas, so that the SMEs could directly submit these documents electronically, so they didn't need to go physically to the branch. So this guideline came into full effect in February of this year, and the banks have been implementing this in order to further support the RMB being used internationally.
Isabel, do you mind if I just add a couple of points on that? Just from
Yeah, please go ahead.
so if you go back to the slide, I just want to add a couple of points from my own experiences running a company in China, and also my handling the accounts for my clients. One of the key things that you have to realize is that the banks in China are very much paperwork heavy. So even though Isabel has said they've simplified the process, there's still a tremendous amount of paperwork, and the paperwork is required whether you're transacting in RMB or whether you're transacting in foreign currency, either or. The paperwork is the same and it's paperwork heavy. So one thing I will just say as a tip is that you've got to make sure the paperwork matches the currency you're transacting in, which people don't always realize, and they think, oh, it doesn't really matter. It matters so much. So for example, when I issue invoices to clients that are overseas that don't have entities yet in China, I need to ask them up front, in what currency are you going to send the money to me? Because my invoice has to match that currency amount. Otherwise, the bank will not put the money in my account. So when the money arrives, it goes in a type of, I call it an escrow account, before it can be released into my physical account. And I physically have to go to the bank with 2 copies of the agreement signed and 2 copies of the invoice chopped. And if I don't do that, they won't release the money. And I have 90 days to get those documents submitted. So you've got to understand that you might be a buyer overseas and your suppliers have to go through this hassle, whether you're sending it in foreign currency or RMB, okay? They have to go through this hassle with this paperwork. I just want to highlight that because I think it's very important for you to have transparency over what we have to do on the ground to get this done. A good point to mention is just with COVID and the pandemic, previously you did have to go vis-a-vis at the bank to submit the documents. Now you can submit it to your relationship manager through courier. So that's also speeding up the process a lot. But I just want to say it is paperwork heavy. And although the paperwork has been reduced, it's still paperwork heavy from our side. So Isabel, that was all I wanted to highlight from point 7.
Yeah, thanks a lot, Christina. That was super helpful. So moving on to the perspective of an importer, right? That is transacting with suppliers in China. So what we're advising here is that companies should be considering transacting into RMB instead of in foreign currency. Because what are the benefits here for both parties? So as an European importer, right? The primary reason is that you'll be able to ensure that you get stable prices from your supplier, and you're protecting yourself against what we call one-sided or one-way risk, which is something that I will further elaborate in my next slide. Also, consider that for these suppliers, because their factories are in China and most of them are buying the raw materials in China in RMB, by asking directly for the prices in RMB, that's when you will get what is their base price and have a higher transparency on the prices that you're getting. Because when they give you prices in USD or in other foreign currency, there's always an exchange rate that is involved, and not necessarily the suppliers would be actively managing that foreign exchange risk that they have. So this will sooner or later have an impact on you. So actually for the Chinese supplier, when our clients, importers in Europe, they ask them about switching to RMB, one of the primary benefits for them is that they can take away this dollar RMB foreign exchange risk, which in China, what happens is that the financial system is not as developed and open as in Europe. So saying that here in Europe, companies can have access to a breadth of like risk management tools. You can engage into derivatives, forward contracts to actively protect yourself against the risk of euro against USD or against RMB. In China, the banks only offer derivatives to companies that are sophisticated enough and that have credit lines with them. also what happens is that because liquidity is a scarcity in China, most of these companies, they would rather use their credit line with the bank to borrow money rather than to spend it on hedging themselves, because there's not a habit of doing that. And as I mentioned previously, because previously the RMB was pegged to the USD, and a lot of Chinese, they also have this speculative mindset. So because of this variety of reasons, most of them, they're completely open to their dollar RMB risk. So if the client is not actively managing that and suppliers is not managing it, then you will hit back to them, as we've seen it happening since 2020 because of the high volatility in the exchange currency. And also, of course, if you're buying from China, you're probably experiencing increase in prices because of the increase in raw materials costs, suffering with the logistics costs. So the exchange rate would be another factor why the suppliers would be increasing your prices to further magnify this price rise. So that's why for suppliers, it's also helpful if they could directly quote in RMB. So at least they could avoid having conversations with clients about increasing your prices because of the negative impact of the exchange rate. So going back to what I was talking about, this one-sided risk from the importers. So I wanted to show here an illustration. This is actually an actual case that we had, that it was experienced by one of our Portuguese clients last year with their supplier in China. So in the chart here, you can see what has been the evolution of the USD CNH rate throughout 2020, right? So normally, how the Chinese suppliers, they would price, if you have stable relationship with the suppliers and then you order regularly from them, they will normally set like a hurdle exchange rate at the beginning of each year. So this exchange rate before 2020, it's been around 6.8, because mostly in the past few years, the dollar RMB exchange rate has been moving above 6.8. So this is a reference rate they've been using, whatever additional profit they could get because of the FX. So that's a profit for them, right? So let's consider this is a supplier that their base prices at the beginning of 2020 in RMB, it's 697 RMB, right? Just to make it easy. And then they're giving prices to our client at the beginning of January last year. So what they said is, okay, 697 yuan divided by the exchange rate at that time, 6.97. Normally, the rate would be a bit lower, right? But just to make it simple, let's assume they're just giving you the whatever exchange rate was at that time. So then that would be 100 USD, which is the price that they give you. They say, okay, so the unit price of this product, it's 100 USD. And the client doesn't really know that the base price behind is 697, but they're happy with this 100 USD. So if we look at the A shaded chart bit, right? So during that first half of the year, the exchange rate was almost most of the times above this hurdle rate of 6.97 that the supplier set. So in May 26, which was the highest rate, 1 USD could exchange for as much as 7.17. So what does that mean? That supplier was expecting to receive 697 RMB. That's their base price, but they were receiving additional because for 100 USD, they could get 717 RMB. And obviously at that time, our Portuguese client, he didn't experience any decrease in prices because of favorable exchange rates, right? The supplier was keeping that. But then we see how throughout the second half of the year, so starting June, July, the RMB started appreciating significantly against USD. So in September 15, the RMB, not only it dropped, but it went below 6.97, which was what the supplier was expecting to receive. So now the supplier couldn't receive 697, but only 675 yuan. So at that time, what happens? The supplier says, okay, obviously, I'm not gonna be doing business at a loss. So what I will do is that I will increase the USD prices of my client. So instead of 100, I'll ask them now to pay me 105 USD. So this is what we call one-sided risk. When the exchange rates are favorable for the supplier, the client doesn't really get a share on that. But then when the exchange rates are against the supplier and are negative, then the supplier is going to increase prices. And what happens is that because most of the suppliers, they are invoicing in USD, everyone is in the same situation. It's not only going to be one supplier increasing your prices. Like most of the suppliers are going to be increasing your prices. And at that time, there's not really much you can do because the exchange rate has already dropped, right? But then if the supplier would have provided from the beginning their base prices, right? 697 yuan, which at that time, it was really the same for the client. Let it be RMB, let it be USD, because exchange rates are equal. But then this would allow the importer to actively choose whether they wanted to manage this exchange risk, how they want to hedge it, and have access to the base price of the supplier, which we know is not gonna change and it's gonna keep stable despite how the USD RMB is moving. Right now, the situation that we're facing, if you're an importer in UK or in Europe, right, and your base currency is GBP or Euro, now both you and your supplier are facing two exchange risks. You need to deal with your Euro, GBP, USD risk, and then the supplier has the USD RMB risk on their side. So even though you're already actively managing your Euro or GBP USD risk, you still have an indirect risk exposure to RMB, which the supplier is not managing, and it's gonna hit you unless you're able to directly get RMB prices from them. This was something that wasn't very relevant before 2016, because either ways, USD RMB were pegged to each other, but now it's no longer the case. So that's why this is an initiative that we've been promoting between our clients for them to consider switching from their regular patterns of doing things and sticking to previously transacting in USD to transacting in RMB. So let's say that you consider switching to RMB with your suppliers. What are some common questions that would come up from their side? Because same than you, for the Chinese suppliers, even though this is their local currency, they're not really used to receive it from overseas, right? So a lot of times when our client says, can I pay you directly in RMB? The supplier has always a lot of questions from our experience, a lot of times thinking, okay, so maybe my client has also a subsidiary in China, and now they're intending to pay me directly locally in RMB. So then they're like, okay, no, because then that means I'm gonna lose my VAT rebate. So here we have basically summarized the three main issues that we normally get from the Chinese suppliers when we help our clients deal with this matter, so that you can also like get a bit of view on what are common issues from the supplier. So the first one is for the supplier saying that they won't be able to get tax refund if they receive in RMB. So what do they mean by that? So every product that is manufactured in China is subject to a local VAT that depending on the type of product that we're talking about, it could be up to 16%. But normally on average, it's around 13%. So the suppliers need to pay that VAT, but then if the products are exported overseas, they'll be able to get the refund of this VAT. So for a lot of suppliers, when the client said, can I pay you in RMB? Then they think, okay, because this is my local currency, does it mean that if I receive RMB, I would lose my VAT rebate, right? So one misconception is if they think that they are receiving it local in China, which obviously then they are gonna lose their VAT refund because there's not an overseas payment received. But even if it's received from overseas, they feel that they might still lose their VAT rebate because it's not a foreign currency. So this is a misconception. Because of this process of internationalization of RMB, the Chinese authorities actually do accept suppliers receiving RMB as long as this is received from overseas. So if it's received from overseas, this would be CN8, and this has also consideration of foreign currency, and the supplier can equally receive the VAT refund from their tax office. But only like going back to the paperwork that Christina was mentioning with the banks. So it's not only with the banks, with the tax office, it's a bit the same as well. The supplier needs to make sure that they're exporting in RMB, that all the customs clearing are done in RMB, and then they receive directly RMB from overseas, so that all the documentation matches and they don't have any issues when claiming the VAT from the tax office. But this is something that it can be done, and we already have a lot of Chinese suppliers that are transacting in this way. Then second one is what we already covered. So suppliers complaining that banks ask them for a lot of paperwork to receive RMB. So this is what we already mentioned. There was this guideline that was issued, but I have to say that depending on the bank that we're talking about, a lot of suppliers are telling us that they still haven't seen the banks significantly easing the paperwork, right? Which is basically what Christina was saying. Regardless of the currency that you receive, you need to go through this paperwork. And then last but not least, there are a lot of suppliers that even though they have their factories in mainland China, they will choose to set up a subsidiary offshore, mostly in Hong Kong, because that would allow them to hold their foreign currency for a longer time, and they can move their funds more freely. So for these suppliers, a lot of times they do have issues to receive RMB directly from overseas, because the banks in Hong Kong will force the conversion, even though you receive RMB into your bank account in Hong Kong, they will force the conversion in USD and ask you to send USD from Hong Kong to China. So for these suppliers, effectively, for a lot of them, they cannot receive RMB directly to Hong Kong because of these operational issues to send it back to mainland China. And for that, we've actually developed a unique product called Parallel Forward, which basically allows the supplier to still provide prices in RMB, but giving them the flexibility to receive the equivalent USD based on the rate of the day or RMB directly. So this is basically from the importer side. Then from the exporter side, right? I thought I would briefly cover in terms of how you can receive money from China. And this is very basic, Christina, and this is your area of expertise. So please feel free to build up on that. So basically right now, how it works, as all of us that have transacted in China before probably knows, China has a strict control in terms of movement of funds, in terms of money in, money out, especially when it's about sending money out, right? So there are only certain categories that are allowed so that you can send money out of China or receive money from your Chinese counterparties. So if it's business to business, the categories that are allowed are cross-border trade of goods or also services. So services include travel, education, logistics. So for all these categories, as long as the documentation justifies it, you can receive money freely from your counterparties in China without any amount restriction. Then outside these categories, let's say if it's for personal purposes, if you're buying from some website abroad, so for that, you would have a foreign quota of 50,000 USD or equivalent per year, which you cannot really exceed unless you have a special permission, well, an ad hoc permission from the foreign exchange regulator, from SAFE, so that you can exceed. Otherwise, outside that, you need to limit to this 50,000 USD, and it doesn't really make a difference whether your counterparty in China is sending USD or they're sending RMB, right? That will still count within this foreign quota, regardless of the currency that we're talking about. So in terms of what are the services that we could offer in this respect, right? For importers that are buying from China, and then for exporters that are receiving money out of China. So for importers, we actually have a suppliers liaison services that help our clients communicate better with the suppliers, because we know how the local regulation work. We have a native Mandarin speaking team, which could help the client with the negotiation of the prices in RMB and what's the exchange rate that is being used. Of course, we can also help with the risk management of these currencies. So we can help to hedge euro, GBP, all the major currencies into CNH at the current rates or hedging up to 5 years. And because this is something that we've been extensively doing, helping our clients pay RMB directly into China, we already have a very mature infrastructure and the funds arrive very quickly. So within 24 to 48 hours, the supplier will receive the RMB into their bank account, which is one of the things that are worried then, whether this is gonna take more time if they switch to RMB. In terms of companies that are selling to China, right? So Ebury cannot really do anything in terms of helping you to send money out of China because this is what the regulation prescribes, but we can help you to directly invoice in RMB to your clients in China so that you take away from them the FX risk and avoid the hassle for them or having to exchange themselves their local currency into Euro, USD, or whatever currency. So we can provide you a RMB account in Hong Kong. So in this case, this would be an offshore RMB. So it would be a CNH account under the client's name so that the client in China can pay you directly RMB into your account in Hong Kong. And because mainland China and Hong Kong is in the same time zone and they're connected, the funds will be received very quickly, like really in a matter of minutes. Something that I have to emphasize here is that even though we're providing the account in Hong Kong, and Hong Kong is part of China, but from the movement of funds perspective, it's still considered overseas. So de facto, for you to send money from mainland China to Hong Kong or to send from Hong Kong to Europe, it's still the same. It's still considered international payments and it's still subject to the same regulation in terms of movement of funds. What this would help you is basically that the Chinese client can directly send you the funds in the local currency instead of having to go through the conversion themselves. So, and because of the time difference, then basically the Chinese company will send you the RMB, which you will receive directly into your virtual account in Hong Kong without needing to have a local entity yourself in Hong Kong. And then because of the time difference between Hong Kong and Europe, which is between 7 to 8 hours now, then you'll be able to see those funds directly in your account in Europe at your morning time, and will help you convert the RMB into your desired currency. So this is it from my side. Now I'm open to whatever questions that you might have. Thanks all for your time.
Isabel, I just wanted to, I did not know that Ebury was one of the largest shareholders was Santander. I just want to make a comment that my preferred or my recommended bank of choice actually in China is Bank of Shanghai, whose main shareholder is Santander as well. So this is quite a nice link right now that I'm seeing between Ebury, Santander, and Bank of Shanghai. I'm just going to bring it out there because I've had interesting experiences with banks in China. And currently Bank of Shanghai is my preferred one, purely from a relationship manager perspective, communication perspective, and particularly during COVID, something that I've learned is it's so important when you're abroad to be able to have a communication point that you can speak to somebody and not rely on random staff who might not have access to the account to deal with these types of communication. So I like this three-way link right now between Ebury, Santander, and Bank of Shanghai.
Yeah, definitely. And we actually have like a Bank of Santander team located permanently within Bank of Shanghai.
Yes,
we work closely with. Yeah.
Yes, I know Sue very well. So who's the main person there?
Exactly. Yeah. Funnily enough, I was just talking to her this morning. So yeah.
Okay.
Yeah.
Small world.
Mentioning to her as well. Yeah, definitely.
One thing that I would like you to highlight, Isabel, because this is also something that I think people don't fully comprehend, and I want to make it a clear, transparent point. You were talking about the liquidity available on the ground in China. One of the things that sometimes I think people don't realize when they're transacting is that there is limited foreign currency liquidity in China, which is why you struggle sometimes with getting payments that are maybe 6 months to 1 year in delay. I don't know if you can add something to that, Isabel, on why it's then so important to switch to the renminbi function as well. If you can add something on that.
Yeah. Because actually historically, because RMB was pegged only to USD. Actually, what we see is that the Chinese central bank, so PBOC, they're mostly holding like reserves in USD, and you can see that in terms of the liquidity and the pricing that the banks give you. So normally with dollar RMB, that would be most liquid. But then when you talk about other currencies, like if you're
Euro,
receiving
pounds
directly or cable, actually the liquidity is much thinner, and the spreads that you get are not like necessarily that good, right? So this is also another advantage of like being able to receive directly RMB, so that the supplier is also saving on their side on exchange rates, and they could also pass this benefit to our clients, right? And also I think it has to do like because of like, you know, all this control in the movement of funds that there is in China. So like all these foreign exchange reserves, they're like very tightly controlled. And actually, from what the suppliers tell me, like even if they receive foreign currency, they cannot hold this. Let's say, okay, so now they say the rate is a bit bad, so I want to hold this maybe for 6 months because I'm not in a rush to use it. You cannot. Like once you receive those funds in mainland China, if it's foreign currency, you're forced to convert it in a relatively short amount of time. You cannot really hold it for a long time.
Isabel, can you touch on the point, because this is a question that does pop up occasionally with some clients who say, fine, it sounds great, I'll transact in renminbi, but what on earth am I going to do with that CNH in Europe? You know, I'm transacting from a UK company to suppliers in China. I'm going to receive CNH. What am I going to do with that? Right?
Yeah.
What do you see your clients doing with that CNH?
Yeah. So to be very honest, like it's true that, you know, even though we're seeing more and more companies transacting in RMB, this is still like very like early trend of this. So most of these companies that we work with, they will choose to convert directly all these CNH into their own currency directly. They wouldn't really be like holding the risk in CNH unless you are also, because this is a situation that we find companies that they are doing both buying and selling from China. So they import some materials that they sell locally, but also they are selling good local products, exporting them into China. So in that case, there's a certain amount of netting that you can do there. So you'll be receiving some RMB from your clients in China, but then you will also pay your suppliers in RMB. But outside these cases, well, something else that I haven't mentioned, right? So right now, RMB, it's not only like widely used in China, but also like a lot of Southeast Asian countries, they can also accept transacting in RMB. Oh, okay. And also some countries that are sanctioned by the US. So for instance, Russia, like China and Russia, they're like transacting now mostly in RMB. And a lot of times when we talk to suppliers in China, they don't have that much experience with receiving RMB from Europe, but they work a lot with countries like India, Malaysia. They're already like transacting in RMB. So this is also something as well to consider if you have suppliers not only in China, but in Southeast Asia. Because of the strong links to China, you could also potentially pay them in RMB as well. And also something to emphasize, right? So the CNH, the offshore RMB, it started trading initially in Hong Kong as the main CNH hub, but actually in Europe, London is also one of the main offshore RMB centers. And actually for Ebury, we pay like all the RMB out of London. So there is like a fair amount of like good liquidity in CNH because of this, because London is one of the main
Right.
CNH trading centers.
I think the four main centers for CNH are New York, London, Singapore, and Hong Kong.
Yeah.
Is that right? Yeah.
Yeah. Exactly.
Isabel, do you mind? I mean, nobody's asking questions, so I'm delving out there just to give clarity to people. Isabel, do you mind going back to your slide where you've got the importer and exporter? That one.
Yeah.
What I just wanted to highlight for exporting to China. So if you are looking to get paid from Chinese customers, one of the most important things that you have to realize, not just is the liquidity of availability on the ground, but it's also the fact that as a Chinese registered entity, if you want to send money abroad, you need to go through a process of registering the contracts that are signed with the overseas parties. And this process of registering contracts is even before any invoice is ever issued. It should happen before any invoice is ever issued, because it can take up to 6 weeks, if not longer, to get these contracts registered. And again, this is something that maybe a lot of you don't realize, is that we need to go physically to the tax bureaus and the banks to get things registered and completed. It's a very old-fashioned system. We cannot just simply, as a Chinese company, go to our Chinese tax officer and say, we've got an invoice from a supplier overseas and we've got to pay it. They're gonna be like, okay, where's the contract? Where's this? Where's that? You need to get this registered before you even settle that invoice. And then also taxes have to be paid before you make that transfer out as well. So not only do you have an issue with getting liquidity from the banks and applying to get pounds or whatever currency you have decided to transact in, but you also have to go through this process of registering these contracts, getting the tax paid before even touching the bank. Okay. So I want to highlight that, because again, everybody is concerned by lead times. And why aren't they getting paid like this? It's because of the bureaucracy that exists on the ground. And although we've got all of these financial institutions and platforms and all of this available, you still have to go through the old-fashioned system of submitting documents and getting things done. So whenever you are receiving money and paying money out from China, you always have to think that there's a bureaucratic procedure that has to occur before we can even go to the bank to make any forms of payment. So I just wanted to add that in this slide as well for you all to understand that.
Yeah, and Christina, I have one comment here, because we keep talking about banks, right? But then we know how like now there's more like alternative payment service providers that are getting into this space. So what's your experience with that? Because I did come across like some of these PSPs that told me that they would be able to like help these companies to like, send the money from out of China. Like they still ask for the same documentation, but you need to don't need to go physically to the bank yourself.
So listen, I honestly don't have experience with these platforms. Predominantly because when you do set up a company in China, you've got to set up a formal account at a bank, right? Yeah. You need to set up a registered capital account. You set up your RMB basic account, and then if you can choose to have settlement accounts separate from that. You have to go through that process regardless. It's part of the incorporation process. If you then find financial platforms that can assist to speed up the transaction, try it. I have no experience over it. I cannot give you any insight. All I can tell you is that from a tax perspective, the tax officer requires the same documentation, and the banks, in theory, if they become these platforms, to be compliant and to follow governance, they would have to have the same documentation. So I honestly don't know how much quicker it really is. I have no clue. I also don't know if these platforms do the transactions prior to getting documents. So original banks, you get the documents, transaction happens. I don't know if these platforms are skipping that step and doing it in reverse. I cannot tell you. all I can say is that you still have to go through the old-fashioned way of working with a bank. And I mean,
Yeah.
why don't you have an office in China? It's because it's so regulated. So,
Yeah.
you know, I don't know how much I believe in these platforms, these
Yeah.
fintech platforms. Yeah.
Yeah. I mean,
If anybody in the audience has any comments on that, you know, please raise your hand and share. I mean, the whole point of this is that we share our experiences on that, but I so far haven't had that with any clients.
yeah. I mean, we had a conversation with like one of these PSPs, and what I understood is that they still need to partner with a bank to do that, right? Because at the end of the day, this is a bank's job. But the only thing that they could speed it up is maybe instead of you going physically to the branch, queuing, and then getting the paperwork sorted, then they say, okay, so you do it at home and then you send it to me and then I'll do it for you.
Right. But I mean,
I'm not really sure how much time that's it.
I mean,
right?
honestly, due to the pandemic and the fact that nobody could visit banks, everything's been done by courier and that has been maintained.
Either ways. Yeah.
So
okay.
that hasn't changed since the pandemic. Everything can be sent by courier to your designated bank officer and they can review that, right? I mean, this just leads me to the point of working with banks where you get relationship managers. So if you work with a bank of, let's say, Bank of Shanghai, who's got an international division that's supported by Santander, and you do have a international relationship manager plus your bank officer, wow, that's all I'm going to say. Whereas if you work with local banks like Bank of China or ICBC or China Merchants Bank, a lot of that is you'll have a bank officer in charge of your account, which can avoid you doing things at the counter. But, you know, I don't know how much longer that's going to last. So again, I always think of getting these relationship managers, somebody you can talk to, pick up the phone and call in case you've got any questions on how to do things or why things are delayed, or getting clarity on things like liquidity and currency exchange and whatnot, I think is vital.
And actually, Christina, I also have like, you know, another question from my side, because we have like, you know, quite a lot of number of like, you know, clients selling to China that would choose to set up an entity in Hong Kong, or suppliers setting up entity in Hong Kong and opening a bank account there. How useful do you think that still is? Or like,
sorry, Isabel, I was just reading Kim's comment. Save your question because I think Kim's comment is very, very useful. I just want to highlight Kim has joined a lot of my webinars, and he always gives great insight, and I always appreciate that. So I'm just going to read out what he's written, although everybody can read it in the chat box. Kim's just said at each major bank, there's a China central bank liaison employee who you have to deal with to get USD changed into RMB. And if that person has got up on the wrong side of the bed in the morning, watch out. They'll make you go back to your office and give them lots of details. And as I have said, lots of paperwork. I've sometimes had to go to that person almost with knee pads on to get them to approve it. It's true. Like Kim, although I laugh because I like how you wrote that, Kim, it's true how sometimes it comes down to your bank officer. And how difficult you have to manage with them. So let me put it this way. You will have bank officers who will follow the guidelines that have been implemented by the People's Bank of China to the T, meaning they don't go outside of that protocol. And you'll have others who are a little bit more lenient and flexible, where you can get by on stuff. But Kim's I just wanted to share Kim's experience because it's very true. Isabel, sorry, what was your question?
Yeah, so how useful do you think it still is for an entity to set up like, you know, a subsidiary in Hong Kong and open a local bank account there versus maybe just having an offshore account in China, because that's also possible, right?
Yeah, offshore accounts are not as easy as you would think to get. And there are certain restrictions on how you should use those offshore accounts. So if you are interested in an offshore account, definitely speak to the banks you're interested in working with for that and understand what their limitations are, because you can't do everything with that account. Setting up a Hong Kong company and opening a bank account. Setting up a Hong Kong company is easy. Opening the bank account is a nightmare. I won't lie on that. So my recommendation is don't set up a Hong Kong company just to set up a Hong Kong company. Set up a Hong Kong company because you have a clear strategy of what you're going to use it for, not just in the short term, but also in the long term. And currently, I'm only recommending people to set up Hong Kong companies if they physically make that an operational office. Because you also have to think about tax components and other areas where it's important. The idea of setting up a Hong Kong company purely for using it as a paperwork hub and for export is something of the past. There should be additional reasons of why you're operating that account, why you're operating that company. There should be hefty amounts of transactions running through that. And ideally, you are making it a physical structure with 1 or 2 people sitting in there. Otherwise, I don't see the point of having Hong Kong. You're going to pay more in maintenance fees to maintain that entity than you are in terms of the profitability you'll make from it. So it's important to evaluate why you're setting up Hong Kong. What's the use of it going to be? What is your strategy for it long term, etc. And this reflects back to the direct import program I was talking about on Monday, right? Where I was saying, you know, you might need a QC manager who sits in that entity. You might need additional people who do physical work and operations for the organization, like meeting with suppliers and whatnot, versus just having it as a virtual entity that is purely paperwork and money flow.
Okay.
It's you know, 20 years ago, if you would have asked me that question, I would have been like, forget China, set up Hong Kong. Now I'm like, no, that we have to be much more strategic about it.
Yeah. That was a bit my feeling. Probably a lot of these entities we see, they're like legacies because a lot of them are shell companies. They have a bank account, but most of the time there's like no people on the ground, and they use a corporate secretarial office, right?
Exactly. And the issue there now is that you can get bank accounts frozen because you're not operational. And then you have no access to the accounts. We've gotten inquiries from companies saying, you know, I still have a balance in those accounts, but they've frozen it. What can I do? And, you know, with the pandemic, I can't travel over to reactivate. So what do I do? You know, if you're, you know, it's cheap to open up a Hong Kong company. It's not cheap to maintain it. People don't realize that. And you have to show transactions. Otherwise, the banks, with the regulations that exist now with FACTA and the US and all of these different things, you know, don't just open it to open it. You've got to strategically think why you're going to use this, right? And make sure transactions are flowing through it and make it operational. And yeah, those types of structures are from the past. Yeah, very old-fashioned. So there's nothing else that's popped in from anybody in the audience. So just very quickly, Isabel, I want to thank you so much for joining in. And thank you for speaking together today. I think Isabel and I are planning on doing a webinar session next year, probably in Q1 as well, talking about sales, the other direction more, because the trend is obviously more people are selling into China and seeing what Ebury can do from that perspective. So we'll be looking at that next year in about Q1. So stay tuned for that. And in the meantime, I just want to thank everybody for joining. For those that joined all 4 days, thank you. I appreciate it. And those that are watching not on replay, I hope you enjoyed the series. I've got no more webinar series for this year. In December, I'm actually doing a challenge on LinkedIn. It's called the China 2022 Blueprint, and it is there especially geared towards companies that are looking to set up entities in China in 2022. We're going to create those blueprints for you to make sure that you get green lit for early in the year. If you want more info on that, email me. What I'm going to do is I'm just going to email my contact details in the chat. Isabel, if you want to add your email in the chat, that way people have it as well.
Yeah, sure.
Then you can reach out. And stay tuned for our January webinar series and webinars. January 11th, we're going to do a webinar on saving your brand in China. So stay tuned for that as well. So, before I finish this, I want to wish everyone Merry Christmas, Happy New Year. It might be a bit early to do that, but I'm venturing off to Hong Kong next week and going to be 14 days in quarantine. So I better send out my Merry Christmases and Happy New Years. Yeah.
Have a good flight, Christina.
Thank you, Isabel.
Yeah,
Thank you so
hope
much.
the quarantine is not too burdensome.
Well, I'll survive. I'll survive.
Yeah. Merry Christmas to you and
Thank
everyone
you.
too.
Thank you. And thank you to everybody. Take care. Bye.
Thank you. Bye-bye.